All right, so you probably think you're done with taxes the second you hit submit, right? Well, what if I told you that's really just the beginning of the game? See, there's a whole other rule book that kicks in after you file. Today we're going to decode that fine print, the super important rules that really define your relationship with the tax authorities.
So, you've done your part. You've filed. But have you ever stopped to think about what happens next? I mean, what are the official rules of the game? How do mistakes get corrected? How is the tax office even allowed to contact you? And what kind of protections do you actually have? That is exactly what we're breaking down today. And here's our game plan. First, we're going to talk about this official rule book and what it even is. Then, we'll get super practical. How do you fix a mistake on a document? And how will the tax office get in touch? We'll also cover the nitty-gritty on deadlines before we zoom out and look at the big picture. This whole balance of power, and why knowing this stuff is so critical. So let's kick things off with the big idea here. What happens beyond filing? You know, we tend to think of the tax code as just a set of instructions for us to pay. But it's not a one-way street. It's more like a two-way contract, a complete rule book for the entire game between you and the tax authorities.
Now, the law might call these provisions miscellaneous, but don't let that boring word fool you. They are the absolute foundation of a fair and predictable system. They spell out exactly how appeals, corrections, and communication are supposed to work. And this isn't just red tape. It's what makes sure everyone, you and the authorities, are playing by the same rules. It's what protects you from, random, arbitrary decisions.
Okay, so how does this level playing field actually work in the real world? Let's say someone, maybe you, maybe even the tax authority, spots a mistake on an official order. What happens then? Well, the rulebook has a very clear, step-by-step process for this.
And what's really cool is just how structured this is. So an apparent error, that's just a fancy term for a clear, obvious mistake, is found. Now, either side can kick things off. The authority can do it, or you can do it yourself, just by writing to them. The authority can then change the order, but, and this is a huge deal, if that change is going to make you pay more tax, they absolutely have to give you a hearing first. They have to give you a chance to make your case.
But there's a catch. This whole process isn't open forever. There is a strict 4-year time limit from the date of that original order. And that's really important, because it means tax issues can't just be reopened forever and ever. It gives both you and the authorities some finality, some certainty. So you can really see the balance here, right? The tax authority has the power to correct an error that benefits them, but your right to a hearing is this critical shield. And at the exact same time, you have the power to start the process yourself if you realize you've overpaid. It's that two-way system in action. Now, all of this back and forth about corrections depends on one thing: clear communication. But how does the tax office even get in touch with you in a way that's, legally binding? Well, it turns out the rules are incredibly specific about this too. The legal term for this is service of notice. And this isn't just like sending you a casual letter. It is the formal, officially recognized process of delivering a document, and it has to be done by the book for it to even be valid. So, how can they legally do it? Well, the code lays out a few key methods. You've got your classic registered post, or the same formal process used for a court summons. And really importantly, in our digital age, they can deliver it by an official email to the address that you've given them. By spelling these out, the law makes sure there's always a clear record that you were properly notified. The rules also get really clear about who can receive that notice. So for a company, it's the principal officer. For a firm, any member will do. And for an individual, it's got to be you or someone you've officially authorized. This isn't just a technical detail. It stops the authorities from just handing a notice to the wrong person and claiming it was served. It protects the whole process. All right, now let's zoom in on some of the nitty-gritty details. These are the small rules that might seem minor, but honestly, they can have a huge impact. Knowing these can be the difference between meeting a deadline and missing one. And this rule is just incredibly taxpayer-friendly. Check this out. When you're counting down the days to file an appeal, you don't even count the day you got the order. Your clock starts the next day. And what if your deadline falls on a public holiday? No stress. You automatically get until the end of the next business day. And here's a fantastic little detail. When calculating a final tax bill in Bangladesh, any fraction of the currency, if it's 50 paisa or more, just gets rounded up to the next full taka. It's a tiny rule, I know, but it just goes to show you the level of detail needed to make a system work consistently for everyone. So all of this brings us to a really crucial theme that runs through everything we've talked about: the balance of power. The tax code gives the authorities the powers they need to collect taxes, for sure, but it also gives taxpayers shields to protect them.
So here's a question for you. If a tax officer makes a call that you don't agree with, but they were acting in good faith, just trying to apply the law as they saw it, can you actually take them to court over it?
And this slide just lays out the answer perfectly. On the one hand, yeah, the authorities have some serious powers. They can extend deadlines if there's a crisis, they can offer rewards to catch tax cheats, and they can even require other agencies to help them out. But on the other side of the scale, you have these critical protections. A simple typo on a form isn't going to kill your whole assessment. You are entitled to a receipt every time you pay. And to answer that question, nope, you can't sue an officer who is just doing their job in good faith. It's a system designed for balance. Okay, let's bring it all home. Why should we care about all these little procedural details? Well, because they aren't just details. They are the entire architecture of a fair and functional tax system. And this right here really says it all. This isn't about boring legal jargon. These rules are the actual bedrock of the whole system. They're what guarantees transparency, predictability, and ultimately fairness. It's what builds trust between taxpayers and the state. So, when you think about all this fine print, just remember these key things. There is a formal, predictable way to fix mistakes. Official communication has to follow strict rules, and the system has these built-in safeguards specifically to protect you. At its heart, every single one of these rules is about striking a fair balance. And that kind of leaves us with one final thought. We've just walked through the official rulebook. We've seen the procedures, the protections, and the powers. So the big question is, does this whole framework actually strike the right balance? Is it the right mix of state power and individual fairness? It's definitely something to think about.